Good morning, everybody. This is Brian Noble with a weekly update of the equity markets and the euro dollar. It's been quite a volatile week since I last did my update on Tuesday. The S&P tested its 50-day moving average, had another nice bounce, 100 handles off it, before finally breaking it on Friday. Last Friday was the highest volume of shares. It was 14 billion shares traded across the US indices. The main reason for that was the quadruple witching when the four contracts for September expired across the board, including all the options. Friday was the first time since the end of May that the S&P has actually closed below its 50-day moving average. And as you can see on the chart here, the 50-day now comes in at 3342, and that's going to act as strong resistance on any rally. This morning, we're seeing the futures markets down 30 to 40 points on the S&P. As we wait for Fed Chairman Powell to speak at 3 p.m. If we go back to last Wednesday's FOMC statement, it was his comments about trying to be more prudent on the fiscal side that sent the S&P lower, and it'll be interesting to see if he reverses tack today, because as you know, the central banks have spent an absolute fortune trying to support these markets. The last thing that they need is a crash, especially with the US election only 6 weeks away. So I would expect any sell-off to be contained. I would be a very aggressive buyer at anywhere near the 3250 area in the December contract. Bearing in mind today, we already have a large gap from Friday's close. As you can see on the screen, the cash close at 3319, the future was 3309. So if we're currently trading at 3280, I would expect a fair amount of that gap to be filled ahead of Powell's speech at 3 o'clock. Moving on to the NASDAQ, which has led this whole move lower over the last 2 weeks. As you can see, the NASDAQ also broke below its 50-day moving average, which now comes in at just below 11,200. That's going to act as very strong resistance on any rally, and I would be a seller into that. And as you can see, the NASDAQ has fallen quite aggressively from 12.5 to currently trade at 10.8 this morning, having traded into the low 10.7s late Friday before we saw a rally back into the close. Again, not looking for too much more weakness from here, especially with Powell speaking this afternoon and a large gap from Friday's close. So I think anywhere between 10.650 to here at 10.8 is good value to buy the NASDAQ, given how oversold we are. Looking for a rally back to 10,900, 10,950, and that would be it. And then, going forward, if we do decide to melt down further, it's certainly very difficult to see the NASDAQ breaking 10,500. But as you can see, 50-day moving average, when we closed below here on Friday, it's the first time we've broken it since April. So it's been a huge move up. So we certainly got overbought on a daily chart. We do a sell off. It's probably done enough for now. Finally, look on the equity side, I'll just move on to the Dow. That has actually held its 50-day moving average, but obviously this morning with the sell-off in the S&P and the NASDAQ, it is the Dow cash is indicated to be open somewhere around the 27,300, which is just below the 27,472 50-day moving average. As you can see on Friday, we closed just about 200 points above that. We have a massive gap from Friday's close. As you know, in the S&P and the Dow, all gaps get filled. So I certainly wouldn't be chasing the market low from here, even though we are due a big correction. If the market continues to sell off, I would be a very aggressive buyer from 26.8 to 27,000. I don't think we're going to break too much lower than that. Again, as I said on the S&P comment above, Powell is not going to let these markets fall without a fight. They've spent too much money trying to support them. And also, don't forget the US election. This is huge. It's 50-50 as to who's going to win this election. So the last thing the Fed want to do is have a crash ahead of this. Finally, I'll just go on and talk about the euro, which, as you know, has been extremely quiet for the last 4 weeks. We hit a high of 120.11 on the 1st of September, and we hit a low of 117.30 last week. As you can see, the 50-day moving average is moving up quite steeply. It comes in at 117.45 today. So really, to get excited about the downside of the euro, we need to see a break of this line. As you can see, it's held from basically from the 18th of May. It's just been an uptrend since. If we want to break out further, we need to break that September the 1st high here at 120.11. Otherwise, I think we're just in a trading range that's getting narrower and narrower. Obviously, as the equities are selling off this morning, the euro is a tad lower. We were at 118.70 earlier on this morning. Now we're just touching the 118.30 area. But I think as long as we hold 117.45, I think the euro is still a buy and dips. And at least you know where your line in the sand is with the 50-day moving average support. Thank you.